Nigel Verdon is a three-time FinTech founder. In 1996, he founded Evolution, now part of BAE Systems. In 2007, he started Currency Cloud. And in 2016, he began building his latest venture, Railsbank. Railsbank is a global banking-as-a-service business that enables any company or brand to become a FinTech. The Railsbank platform enables marketers, product managers, developers, CEOs, and founders to prototype, launch, and scale financial products super fast through using an open finance platform, operations, regulatory licensing, and rich set of simple APIs. Railsbank has raised over $120 million from leading investors including Anthos and Middlegame Ventures. We hope you enjoy the show. Nigel, thank you so much for taking the time to chat with us today. It's a delight to be with you. Maybe what we could do is start off with the space you're in, or specifically the technology that you provide. It's fascinating because it's truly a way for brands to better engage with their consumer base by using FinTech. So if you could tell us a little bit more about the company.
Sure. Thanks for the invitation to talk as well. So the company is Railsbank. I'm the CEO, Nigel Verdon, the CEO and co-founder. What do we do for our customers? So we look through the lens of our customer to their consumer, and then we try to understand what experiences that consumer is looking for. For example, a consumer doesn't buy a car loan, a consumer buys a car. And so how can our customer, who also wants to engage with the consumer with a car loan as part of the car buying experience, embed that financial experience into the car buying process, experience, journey, etc., and make it embedded as opposed to flipping out to a banking experience or filling out paperwork and that type of thing. So what our technology, which is a question, was that our technology is the tools for customers. The customers can be various brands, so retailers, grocery stores, and FinTech companies. The tools to allow them to deliver financial experiences, which are like credit experiences, wallet experiences, payment experiences, loyalty experiences to their consumers and embed them in their own customer journey is what we do. And it's not just the technology. We provide a complete turnkey service. So technology, financial operations, financial licensing, scheme memberships, we're principal members of Visa, MasterCard, all the regulatory pieces. So the complete vertical stack to connect the consumer all the way to the central bank and a consumer all the way to the payment scheme. We own that stack end to end. And that's what makes us different. We're not just a piece of software that sits on top of the old legacy banking system. We've completely got rid of the legacy and we connect directly.
Excellent. So is it as simple as thinking, take one of the famous brands right now, or trending brands, I should say, is Peloton. So for example, if Peloton were to say, we want our consumers, our fan base, we want them to have a Peloton credit card, would they then, use Railsbank to be the de facto software that would manage kind of the whole payments function of the credit card? And does the loans then sit with their existing bank?
So let's use that as an example. If there was a Peloton wanted to launch a credit card experience for their cards, so drive loyalty, drive engagement, drive data, and you get a lot of demographics of where they're spending. For example, if they spend in sports stores or do they spend the credit card in the bar, that will allow them to actually market, sort of understand their consumer and understand what sort of exercise they could also be selling or health to them. So we provide the technology. We're principal members of Visa and MasterCard, so the scheme membership. We provide all the way through to the banking pieces as well. And from the credit, we can bring our credit line with us, and we can allow Peloton to participate in that credit line themselves to deploy their own balance sheet. So take part of the debt. We can participate that, and our lending partners can participate in that as well. So we own, as I say, complete stack, not just the software. And then we operate the financial operations for loan servicing, So, for example, making sure that the repayments are done on time, for selling off bad debt as debtors. You do all the transaction monitoring, all the other pieces that you do as a regulated business. So it's if you look at, let's say, especially in the US market, a lot of the competitors are just pure piece of software. We're fully vertically integrated stack.
Fascinating. Yeah, it's interesting because there's certain car dealers in the US that are making less margin on the actual sale of the car and making more of their profits on the financing. So it sounds like it's truly enabling these auto dealers or auto companies to, in a sense, capture that financing profit.
Sure. If you look at housing and cars, are the two big purchases of a consumer generally in their lifetime. And divorce is probably the third one, if you said people go through it. So there's a big movement at the moment of car subscription, which is another way of saying lending or leasing. Mm-hmm. Especially in the European market, I think 80% of cars now sold all have a leasing agreement as well with them. And the leasing agreement can be actually a traditional loan where you own it at the end, or you give it back and you then take on another lease for another car. So it looks like a subscription essentially. And so, yes, and the margin in the industry, that's why GMAC and Ford Finance and all these other businesses do actually make a ton of money, because they help the person buy, but they make a high margin product for it, and they know there's the security of the product as long as it doesn't get crashed. But if it gets crashed, it's insured anyway. So you've got quite a nice sort of system. You've got the credit insurance based into the car insurance by default. It's a nice experience. And plus, from a consumer, there was a sort of one of the trends we noticed, tend to drive nicer cars now and newer cars, because the financing enables them to do that, rather than they keep the car for 10, 15 years and then buy a new one and finance that over time. The leasing approach or subscription approach puts more cars on the market. Plus, it allows that shift, I think, from a governmental side towards trying to get towards zero carbon, therefore to pure electric, or to more efficient cars on that journey to pure electric. So you start phasing out of the ecosystem inefficient cars and a move to zero carbon cars or electric cars. There will be carbon producing the electricity, but you've got that shift for governments as well. In G10 countries, it's going to be very different in places like China.
Mm-hmm. And I'd like to talk a bit more about kind of your perspective on the whole payment space, because you've been multiple times entrepreneur in FinTech. But before we go there, a little bit more about Railsbank. Which sectors, we talked about the auto sector, which sectors do you find your technology has the most relevance to?
We started in the FinTech world as being like the enabler for a new wave of neobanks. And we have, I think, about 46 neobanks sitting on top of us, and equivalent of, and new wealth managers, new saving products, and those business. And that was when we first started, because it saved them all building their own infrastructure. They just took our components and embedded it into their own customer journeys, user interfaces, etc. The ones we're seeing, we don't look at the world in digital natives and emerging digital. And emerging digital is people have taken that leap to at least have an app. Okay, they've gone beyond the website, if you say something. And so there's brands like people like retailers in the supermarket world, we're getting good traction with grocery stores because they like to have a full stack view of the consumer, and they can increase the engagement by having financial products instead of the weekly shop. They can see them every day, and if they're going to competitors, for example. And you can put reward points and open loop reward points, so you can have certain offers if they're spending at a competitor, for example. So we're seeing good traction in there. We're starting to see traction, and we've got customers now in who've got fan bases. So it's stadiums, sports, like McLaren Formula One is a customer, and they're engaging with a fan base because very few people in the world will race Formula One for McLaren, because they have 2 drivers a year. Very few people will own a McLaren because they're like second-hand is $650,000. New, they're well over that. But they have millions of fans. So how do they engage with those fans? And it comes back to esports. The drivers actually come out of the esports world and then go to the karting world and then go into the Formula One world. And there's a ton of people, if they sponsor them on the esports, they buy a McLaren skin to put on their card in esports, it's embedding finance and buying that skin experience. And if they can reward them if they win, they can put it into the McLaren wallet. And if the McLaren wallet gives certain points, you get the McLaren card. And then on race day, you can go to the paddock and see the drivers. Mm-hmm. So there's a whole way that finance is there in the background, but it's enabling an amazing fan experience of McLaren. And McLaren can make money of it. They can see what today's consumer is. They can get trends on what tomorrow's consumer looks like as well. So if you see Money 2020, there's a conversation with the head of marketing for McLaren, myself, and QuantumPay, who are the official neo-banking partner of McLaren, and we support that business underneath.
Fantastic. Now, I'd like to switch gears a little bit and talk about your experience as an entrepreneur, but then also kind of knowledge of what's been happening in the FinTech space. And we talked about traditional banks versus neobanks. Where do you see payments today and where do you see it heading? Meaning, you've got the incumbents, the JP Morgans and Goldman Sachs of the world, who are increasingly participating in digital payments or other types of fintech. And then you've got the kind of more native fintech startups and purely digital banks. How do you kind of make sense of the space where it sits today, and where do you think it's headed?
Sure. Today, the big move since 2012, tail end of 2011, was very much about taking, say, the payment space and making it digital. So they took transactions and made them digital transactions. They enhanced the data on those transactions to make them more useful. And that's where Pay Presto, you got Stripe, you got TransferWise and everything. And you made them much easier to integrate and consume. And it was really taking legacy and just making it as a digital layer on top of the legacy infrastructure, except TransferWise, because they, like ourselves, direct clearers with the Bank of England. So that's a pure end-to-end digital with no legacy in it. So where we are today is great. The neobanks have taken a banking experience and made it digital. They haven't just made the branch digital, they've made the whole experience digital, rather than just automating the branch and sticking it on the phone, which a lot of the traditional banks have done. And so we're now in the first wave of some of the basic products in finance being made digital. So it's a good movement, but we've still got a ton of legacy sitting in the back end. It still sits on top of JP Morgan. It still sits on top of some of the Goldman stuff. It still sits on top of Bank of Merrill Lynch's pipes and everything. So where do we go next? The next is people like ourselves as a B2B level and TransferWise on a B2C level. And they also do some B2B as well in the B2B business. The guy who ran that's now our Chief Product Officer, of where we've all gone directly integrated into the financial system and bypassed the legacy. And what's that allowed us to do? We now control the cost. I don't have JP Morgan or Barclays or anybody telling me what price it is. It's the Bank of England or the European Central Bank which tells me what price it is to transact and clear the currency. We own the operational excellence. We own the compliance risk, so we can decide what customers we do or don't want in our own risk policies. We don't have a legacy risk policy from a third-party bank telling us what we can and can't do. And what this has done, it's removed banks as gatekeepers to currency, gatekeepers to credit, gatekeepers to capital markets and everything. The same way that when Apple launched the iTunes was basically it's taken record labels and removed them from the gatekeepers to the fans and the gatekeepers to the artists. And what's happened with the music industry, and in a parallel life, I've got a massive other life in the music world. You can probably see the guitar behind me there.
Yeah.
The music industry was on its knees pre the iTunes. After it, and they restructured Spotify and everything, and a fan direct to artist direct to fan. The record labels are still in there, even though they're not the gatekeeper anymore. They're still playing a vital role. The consumer is better served. The artist is better served without some of the stupid contracts they used to get under. And the music industry is massively thriving. There's much more creativity, there's much more distribution because it's all re-energized because the gatekeepers were moved. And the gatekeepers were only there historically. They weren't doing it from an evil perspective, either, if you see what I mean. So look at the banking world. Same thing as moving the banks. And again, banks aren't being evil. That's just historically, that's how the industry is structured. But if you open it up, and Goldman's one of the first people to really push for this, SEB, I know, working on it, and a few others, is where Goldman's philosophy is very much came from a guy called Marty Chavez, who's the former CFO and CIO of Goldman, who's connected to one of our main investors, was a bank is regulation, and a bank is capital, and a bank is essentially lending. If you put APIs around that bank and make it available to people like Apple with the Apple Card, hey presto, you've created a great thing. Apple can originate millions of consumers much cheaper than Chime, for example. Mm-hmm. So you've created an ecosystem where Goldman said, right, we're opening up, we're not gatekeeping anymore. Here's access to. So we see a move where the brands who have millions of consumers don't need the cap costs underwritten by venture capital, but can deliver financial services, financial experiences to the consumer embedded in already in their customer journey. Their acquisition of a loan is around probably $5 to $10. As opposed to a bank, it's about $350 to acquire a loan, so an asset on the balance sheet. And ditto for acquiring a liability or a deposit on the balance sheet is still extremely expensive in banking, but very, very low for brands. So if you bring those two together, you change the economics of banking, and you look at most banks' return on capital, return on equity and everything is pretty damn low, and the share price is reflecting it. Share price of banks should be a lot higher, but because they have legacy, they have cost and everything else in there, and process, and the acquisition cost of assets and liabilities far too high because of that, you actually create a new ecosystem like they did in the music industry. So that's where I see the future is banks opening up, probably not so many banks, because there's like 6,000 or something in the US with credit unions and banks and stuff, which is a totally overbanked market. And so you've got a risk there of inefficiencies too, because you've got to have a reasonable size of a balance sheet and operate it properly. So you've got Fifth Third, you've got Capital One and others, and the other names in the US. And it's almost like you're going to get these Spotify businesses, you're going to get businesses like ours, or like AWS, financial layer businesses, creating a brand new financial system where the economics will work. And hopefully, like the music industry being turned around, the finance industry turns around to be economically working for banks, financial inclusion to people who should be included in the system, but can't because banks aren't charities and shouldn't be charities, and it's too expensive as a bank. 92 million people unbanked in Europe alone, 6 million in the UK. It's over 12% of the population. So we can get a happier place, but like getting to a happier place sometimes is turkeys voting for Christmas or for Thanksgiving. It's a difficult thing to go through at times. So our vision is that's the way the industry is going, and that's what we're one of the prime movers and facilitators of that change.
Now, you mentioned something interesting, the underbanked, and how it's a significant piece to, even developed economies. Which technologies out there or startups out there do you think are addressing or doing a good job kind of maybe trying to address that financial exclusion?
Sure. Southeast Asia, where there's very much financial exclusion. And if you look at, say, Grab, GoCheck, and the super apps, they're now doing financial services because they're trusted to do a ton of other stuff. Mm-hmm. And there's also trusted you can be in a gig economy and you'll be working for one of them that's doing delivery or whatever. So they're part of the ecosystem, and they've massively increased the reach, and they've reduced the costs to deliver, so credit, deliver payments, deliver wages and everything to the end consumer or say gig economy worker. So there's those type of businesses have done that purely because they have the reach. The digital change didn't happen in the banking industry in Southeast Asia. In UK, Europe, North America, North America can be very difficult because it's a sponsored market and the regulation hasn't changed, and therefore until you got the regulation change, you never get rid of the legacy that sits and the legacy cost. So the US, I don't think will ever be inclusive unless the regulator changes, creates a new money type regulation like they have in UK, Europe, Southeast Asia, Canada, Australia, Brazil, and every other else that's not the US. So it's part regulation will do it as well as technology to deliver that.
Got it. I'm eyeing the clock here. We're coming up on time. I do have a lot of questions left, but I will trim this down. One is, and I should always discuss investors because that's a big part of our audience, and you've raised I think over $100 million or pounds. Tell us about kind of the value that your investors have brought to Railsbank, beyond financial capital. How have they helped you scale?
Sure. First of all, the original investors, the angels who support us and seed essentially, all either industry or ex-entrepreneurs themselves. And so we had people like the former head of Google Wallet for EMEA. We had the deputy CEO of HSBC. And so all colleagues within that sort of ecosystem. Because what we were pitching then was what we're doing now. And the people who were within the industry, hey, we get that. We understand the value add. It's a lot just didn't get it at all because it's like saying iTunes will be amazing, but the MP3 thing has been a failure. No, the iTunes will be amazing type of thing. So they got us network, they got us access, a lot of supportive bouncing ideas, etc., experiences, the Google Wallet experience. So they tried to launch in 18 countries on Citibank and just couldn't. And so that's our value prop is launching countries super quick. And then there was Series A, past Series A. We've very much focused on very founder-friendly investors who can help us through their network reach other markets, reach customers, are smart enough and experienced enough to very much debate through things that's top of our mind at the moment. Series A is product market fit, getting customers, getting them to pay, business model, figuring out that where's the buying point, where's the pricing point, all those pieces. Post Series A, it's about figuring out how do we scale up, how do we scale product, how do we scale people, and finding access to the right people. And so, for example, Anthos, who led our last round and was participating in the previous one, have access to a lot of the old Goldman people. They're all ex-Goldman themselves. And also Emily, who's president of the fund, was like the 100th person in Google, built out AdWords, was the CEO of Snapchat, CEO of Instagram. So those scaling stories, those how to motivate your team and engage with your team, that they have a sense of purpose and one direction, and that's how you build big businesses, because people build businesses, not a sort of process and technology. Those things have been massively helping our thinking, and then access to people like Marty Chavez from ex-Goldman, who's a massive thinker about the future, what the bank looks like of the future, has been really helpful. There's access and guidance and help, and not trying to micromanage the entrepreneurs or anything. These I've experienced investors before where they're trying to manage you and everything and say, well, you're investing in us, we manage the business, we hit our numbers, that's what we're here to do, kind of thing.
And final question, given your background and kind of years of experience building businesses, if you had to boil it down to kind of one concept or one idea, what kind of do you think is the most important thing to remember as you're building a business?
Actually, two things. Never give up and have great people. So two things. Never give up, great people.
Excellent. Well, that's a good note to end on. Nigel, thank you so much for taking the time. I know our audience will find this very insightful.
Thank you. And thank you for the invitation as well.